Okay, so the first thing that we wanted to discuss today is basically a follow-on, Chris, to a story that we discussed a couple of weeks ago, which is the idea of this AI gold rush being all shovels and no shoveling, meaning there's a huge amount of capex investing into the AI infrastructure, but not a lot of actual gold mining going on, not a lot of revenue happening. And so in the past week, this is becoming a bit more of a there's a bit more heat around this. There have been a number of reports from Goldman and from Sequoia, and I think there was another one as well, basically questioning the level of investment into AI infrastructure. And so Sequoia did an analysis where they basically said, given the amount of money being spent by big tech and by all of the other venture funded startups into AI, there would need to be $600 billion in incremental annual revenue in order to justify that investment. And this was actually itself a follow-on to an article that Sequoia published in September last year, where they estimated that was 200 billion. So the amount of investment that has happened since September 2023 means there is now a shortfall of $600 billion of revenue that needs to be made from all of this spending on GPUs and so on. What's really been happening here is that the article talks about the fact that due to Moore's law, GPUs themselves are a depreciating asset. There are faster GPUs coming, and a lot of the power is accruing to big tech. So it's hard to see that with this investment boom, that this amount of revenue will ever be happening. And right, the $600 billion is a huge amount of revenue, and that number is continuing to go up. So that really is a valid question, and it's not clear to me, like I said, and like Amira said last time, Chris, where that revenue is going to come from. What do we think? Do we agree with this? How do we see this playing out?
Yeah, we've been talking about versions of this for a number of weeks on the show, right? Sequoia here is talking about supply shortages subsided, GPU stockpiles are growing, OpenAI has the lion's share of revenue. There is now a $500 billion hole in the market that Apple and Microsoft and Meta will have to generate $10 billion annually to really justify all of this spend. And it's not over. They're just they're doubling down and doubling down. And as we were talking about in the last episode, it's not clear that anyone's actually building any real use cases here, at least no one beyond the top tech companies. I've been saying for quite a few months now, it's not clear to me where the ecosystem plays are in some of these categories, because when the model can generate the application on the fly, well, what's left for the application layer in some cases, in many cases? There's a lot of reasons to be, if not skeptical, at least cautious about this AI boom, in the sense that it's going to be broadly valuable to startups everywhere, in the sense that these tech companies aren't massively over-investing or ahead of the curve, and that NVIDIA's sales, revenue, and valuation is potentially overinflated. Now, I'm saying there's an argument to be made about that. I'm not saying I necessarily believe that argument. I think we are at the beginning, very beginning of a massive, massive platform shift that we can't even begin to comprehend. Uber, I think, was not a twinkle in Steve Jobs' eyes when he invented the iPhone. The idea of real-time, on-demand marketplaces disrupting logistics globally, I don't think was contemplated in hey, let's build a better internet communicator. All we really have to go on is science fiction. And science fiction, from Westworld with Rehoboam through to Terminator 2 through to Her, predict massive societal shifts and kind of mind-bending levels of sentience and superintelligence, and potentially catastrophic implications, if not just on the economic side, then potentially on the society side and life as we know it side. So, investing ahead of this curve feels like a reasonable thing to do, and investing hard feels like a reasonable thing to do. But it might end up being like fiber, where these companies invested heavily in optical fiber, especially in the US. All of that fiber lay fallow for many, many years. Many companies, including Google, bought it up. And over, decades, that fiber started to come to life and that bandwidth started to get used, but it took a long time. And I think we're dealing in half-lives here, so it's not going to take quite that long, but it's not going to go as fast as everybody thinks either.
I think one of the convincing things for me, Chris, from that Sequoia article, well, I mentioned two things. We've talked about the fiber analogy before, right? And I think it's a valid one. What's interesting is that investment in fiber paid off in the long term for the world, but not for the companies and the investors that actually paid the price. So they kind of, in a sense, holding the can for the benefits of the future companies and the future innovation that rises from their ashes. So I think that is an interesting point to observe here, right? Like, who are the chumps who are basically progressing the world at their own expense? But there's another thing that is different from fiber, which I think the article makes a good point. And again, it's Moore's law, right? It's the fact that silicon, in this case GPUs, are rapidly depreciating assets. Unlike fiber, which was basically a physical medium, even when it was being laid back in the 90s, it was capable of carrying a gigabit, 10 gigabits, which was several orders of magnitude more than the bandwidth available at the time. NVIDIA, like you said, is coming out with a new GPU that's 2.5 times more powerful in the current state of the art. So the question is, you do all this investment, but if the reward won't be reaped for another 10 years or something, then you end up with basically these massive stranded assets. And so this isn't really a discussion about, is AI the future or not? This is a discussion of, is all this investment going to lead to a fairly spectacular bubble burst? And, I think that Sequoia article makes a pretty good point that it's fairly likely to do so.
Well, it's all of this investment in these depreciating assets, these GPUs that are becoming obsolete every year. I think that's a reasonable argument, but I think that major tech companies and the procurement officers at these companies would say to you, well, the asset might be depreciating, but the model that we're training on these GPUs is the point. And so the GPU could depreciate to zero and its utility depreciate, but we have the model to monetize and learn from and evolve now. I think it's just too early to tell across the board. There's too much change happening too fast, and we just don't know. Sequoia tends to be pretty clever in their analysis. You can go read Sequoia's article here. It's titled AI's $600 billion question. We'll include it in the show notes. And I think in the short term, they're right. As you said, Yaniv, some people are going to get left holding the bag. And in every major platform shift, in every major bubble, in every major gold rush, there are people who are left holding the bag. The bet that everybody's making is when the music stops, they're going to have a chair. To mix metaphors to hell. You've got to be in it to win it. Yet another metaphor. I, for one, we've talked about Silicon Valley versus Australia or other markets, and we've talked about this idea that Silicon Valley has a lot of bubbles and they pop, and the US has bubbles and they pop, and I would rather be in a country where it's more steady state. I would rather be, for my money, and as entrepreneurs and founders listening to this show, I suspect you would agree, you want to be part of the curve. You want to be part of the enthusiasm and the optimism. And you want to bet on your ability to execute and make your bet, make your claim, participate in the upside and live with the downside if that happens to be where you land. And so I think it's net good for the tech industry to have this kind of enthusiasm and to participate in it.
Yeah, actually, just to put a fine point on that, Chris, this article is about the overinvestment in AI infrastructure. That's all of the big cloud providers just buying up all the GPUs and making them available. And the article is suggesting that they're probably going to take a big loss on that. But their loss is kind of everyone else's gain, Chris, because what's happening is that AI compute is getting cheaper and cheaper and more available. There was a big supply crunch. There's this saying in economics, right, which is that there is never an undersupply. There's never a supply crunch that is not followed by oversupply, right? Because the economic stimulus of there not being enough of something means everybody goes and gets more of it. And then you end up with an oversupply. So I think we are in that transition phase of going from an undersupply of GPUs to an oversupply. That's coming. And so that's going to be great for every startup that makes use of AI. So as we've talked about in previous episodes, it's like, how do you make use of this wisely? How do you make sure you maintain a customer focus, a customer obsession? You don't get carried away by the shiny object of AI. But no doubt, if you do this right, the current situation for founders is an absolute boon.
Yeah, and maybe just a closing thought on this. It's unclear still, though, that there will be an oversupply here because thanks to exponential curves, the demand to train ever larger, more sophisticated models and to run inference on them, and those models becoming more costly to train and run, may mean they just keep soaking up all of that demand, all of that compute capacity. And so if we're racing towards generalized intelligence, who the hell knows how many GPUs that will take to train and to run? And I'm always, in these conversations, I'm always thinking about this, and I've never mentioned it before, but I'm thinking about Rehoboam from Westworld. This giant sphere, and God knows, what was below the tip of the iceberg there. And this is the show on HBO, where you could imagine these giant intelligences running by the top 4 or 5 companies that are running the world, like just literally running the world. And like, how many GPUs does that take? I don't know, but it's probably a few more than we have right now. And so I'm excited to see how it plays out. And I think anybody who pretends they can predict it is full of shit. So we'll see what happens. All right. That's our thoughts about overinvestment in AI and a possible bubble. What do you think? Join us in the comments and let's discuss it together.